Hello everybody, I'm John with JP Strategic Investments, and today we're going to talk about the CPI data that we just got today and why it's really not as bad as it seems. And we're going to get into the one thing that's kind of driving this number up and what's really behind that. Now, in case any of you guys aren't really aware of what the CPI actually is and how it works, basically it's a measure of inflation. And so the expectations for these numbers for month over month were about 0.2 to 0.3%. And the expectations year over year were about 3.6% or so. Now, the numbers that we actually got were month over month was about 0.8%, and year over year was 4.2%. So pretty significantly higher than the expectations, right? Now, there are a couple things that we have to get into, though, and that is something that they mention in the first paragraph here, and that is that the index for used cars and trucks rose 10% in the month of April, and more importantly, that it accounted for over a third of the seasonally adjusted all items increase, right? Now, what that means is basically a third of this increase here, month over month, and a third of this increase year over year is accounted for just by this 10% in the increase in price of used cars and used trucks. That's pretty significant, right? That would mean essentially take that away, and now we're down to almost 0.5 here, right? And we could be down to actually under the 3.6 that was originally expected year over year. So that's really something we have to take into account. Now, what I would want to know, though, is what's really driving the price of used cars and trucks up so much, right? There's no like shortage of used cars and trucks. Now, there is, though, the semiconductor shortage that has been limiting new car production volumes, right? And so what's really behind this, it's actually pretty interesting, is rental car companies. They actually, in case any of you guys didn't know, when the pandemic first hit, when we had all of these lockdowns and travel was basically at zero, nobody was renting cars, nobody was going to the airport and flying on planes, which is the main place where people actually rent cars. They actually sold, a lot of these companies sold their inventory of cars just to make up some of the losses, right? Just to get some cash so that they could stay afloat, so that they could kind of wait out this period of time where there was going to be basically little to no travel. And now they're starting to buy back cars. Well, normally they would buy new cars, right? And they would buy them slowly and kind of accumulate them. Well, with the shortage of production, with a new car, them having to wait a month, 2 months, 3 months, even more to actually get those cars, the specific ones that they want, they're having to resort to buying used cars, and actually used cars at auctions, right, where the price could be driven up even more. So if we get into a little bit further into here, basically they're saying yes, they've resorted to buying these vehicles at auctions. And one of these consultants that was talking about what their strategies are is saying that you never go to an auction to buy routine sedans and SUVs. It's like something as a rental car company you really never want to do. One, you're getting a used car, right, which a lot of times might not have as much rental value, but two, you're having to probably buy it, especially if it's at auction, for maybe more than it's actually worth. And they say right down here, this demand is sending used car costs soaring. The Manheim Index, which is an index that measures the prices at these wholesale auctions, shows that they're 52% higher than they were a year ago. That means the average cost of a car that is going for these auctions, let's say a used car would normally go for $10,000, now it's going for over $15,000. That's a huge increase in the price of these cars, and now you can really see why that used car index is rising so much, right? But the interesting thing is and this actually gets to another thing in the CPI where it's really not as bad as it seems, is the rental companies aren't actually getting hurt as much as you might think from this. It says, despite the acquisition expenses, the car crunch is a boon for rental companies, which stand to benefit from improved profitability as they rent out every car they own for much higher rates than they could charge before the COVID pandemic. So the rental car companies, because there's also now a move to a lot of people are going and traveling more. There's kind of a boom in travel and vacationing now, especially with summer coming up, but also a lot of people haven't gone out and traveled in a while. Now they're getting their vaccines. And so there is a huge demand for rental cars. Actually, just a personal example myself, one of my friends was looking to book a trip this summer, right? He was looking 3 months in advance to book out the cabin, a rental car, and things like that. He couldn't get a rental car, booking 3 months in advance. That's how much demand is for all of these things right now. So one of the things that goes into that, and we get back into this consumer price index, I want to go down here where they really break out the individual numbers. So if we look right here, and I'm actually going to bring it up so I can draw on this. If we look right here, we can see the used cars and trucks. This is right here. This is that 10%. So this is the month of April for 2021, and these are all the numbers for April, right? Well, we have this used car number, and then down here, another one of the big ones is transportation services. Well, that includes rental cars. That also includes air travel, which prices are going up now, right? Because there's more demand for air travel. People are flying more. Again, they're getting the vaccine. Summer is starting, everything like that. So we have this big increase as well that's also contributing to this higher CPI number. And one last thing that I want to put out here is one of the other major numbers here is commodities, right? And this is when we think about lumber prices is probably one of the major things that's driving this number. If you haven't seen the lumber prices, if you don't know what I'm talking about, just Google it. You'll be really surprised by what you see. But basically, if we take this out, right? We take this out, and we take this out, now this looks a lot lower, right? The only really other thing above 2% here is this one right here, right? Which is utility gas, right? But other than that, almost everything else is below the 1% mark. And so really, if you guys know how averages work, right? These higher outliers bring up the average. You take these out, now we're looking more like in the 0.3, 0.4% range for this CPI number. Still a little bit higher than expected, right? But definitely not in the 0.8% range that it's looking at right now and the 4.2% year over year. So this is just something that I really wanted to bring to people's attention because I think the market reaction today was a little over exaggerated. Rental car prices, right? It's not like that's going to be a trend that's just going to continue. There's not going to be this continued spike in demand for rental cars and this continued shortage of cars, right? Same thing with the lumber and the transportation services, right? Those are trends that are not like a long-term trend. Those are just certain things that are happening right now that are making this number look a lot higher than it actually is. So anyways, I hope you guys found this helpful. I hope this maybe made it easier to kind of evaluate what's going on in the market right now. If it did, please don't forget to like and subscribe. And other than that, see you next time and have a great day.